Hi everyone, welcome to the session. Now let's look at what is a right issue and how to deal with right issues. Basically, a right issue is an issue of shares for cash. Unlike bonus share issue, in right issue company raises cash by issuing rights. So therefore, the rights are offered to existing shareholders who can sell them if they wish. So, what are the benefits to the shareholders? What is the purpose of issuing a right issue? Uh, Basically, shareholders get benefited because rights are issued at a discount to the current market price. So, therefore, that is the benefit that the shareholders get because they will not have to pay the market price and the shares are issued at a discount to the current market price. And therefore, the advantage to the company by issuing right issue, it can raise cash for the company. So, on the other hand, it can also keep its reserves available for future dividend. However, if the existing shareholders do not take up the right issue, so it will dilute shareholders' holding. So that is the disadvantage of issuing right issue. Now let's move on to a particular question. Now let's go through this particular question. Ramesh Silva and Company statement of financial position extract is given. The shareholders' equity, stated capital is given, ordinary shares issued at 1 rupees each. So you are given 1 million. And the reserves also given, revaluation reserve and the retained earnings. The total is 2.5 million. The total is 3.5 million. Ramesh Silva and Company desires to make a right issue. The terms are 145 at 1.25. That is one new shares for every 5 already held at a price of 1.25. Assuming that all shareholders take up their rights, show the necessary double entry and adjust equity statement. Okay, so now what is the right issue? The right issue is, it is one new shares for every 5 already held. So it is given one new shares for every 5 already held. So they had 1 million shares. If you divide 1 million by 1 rupee, so that will be the number of shares will be how much? Number of shares will be 1 million. Okay, so this 1 million divided by 5, because they say 1 for 5, 1 new shares for every 5 already held. So therefore 1 million divided by 5 will give you how much? 200,000 shares. So 200,000 right issue. So this is a right issue. So at which price these rights are issued? 200,000 times 1.25. So which means rupees 250,000. Okay. So what is the double entry for the right issue? Because as a result of right issue, the company will get cash. So therefore, the cash or the bank will be debit 250,000, and you need to credit the stated capital. Stated capital will be credited by 250,000. So as a result of that, the stated capital will increase by 250,000, and cash will increase by 250,000. So if you prepare the financial position, adjusted financial position, so that will be you have stated capital will be 1 million plus 250,000, so which will be 1,250,000. So these are in millions. Okay, then we have reserves. Under reserves you have revaluation reserve, how much? 500 million. Then retained earnings will be 2 million. The total will be 2,500,000. The total will be 3,750,000 will be the shareholders' equity. So this is how you record the right issue. Now let's move on to another question. Okay, let's move on to this question. Steve Fernando Company statement of financial position as at 31st December 2020. Extract is given. Stated capital is 10 million. Revaluation reserve 7 million. Retained earnings 8 million. The total is 15 million. The total shareholders' equity is 25 million. Steve Fernando Company decides on a right issue of 144 at 1.2. So which means one new share for every 4 shares already held. So what is required? Calculate the double entry to record the issue of shares and prepare the adjusted financial position. So one new shares for every 4 shares held at a price of 1.2. So how many shares? It is, let's assume it is 1 rupees each. So therefore the total number of shares will be total number of shares will be 10 million. This 10 million divided by 4, so which will be 2,500,000 right issue. Okay, this is the right issue. So at which price the rights are issued? At 1.2. So 2,500,000 times 1.2, so that will be how much? Rupees 3 million. Okay, this is 3 million. So this is the total value of the right issue. So what is the double entry for this? The double entry will be when you issue rights, you will get cash. Company will get cash. So therefore, the cash or the bank account will be debited by 3 million and stated capital will be credited by 3 million. Okay, so when you prepare the adjusted financial position, so it will be first of all stated capital is 10 million plus 3 million, so which will be 13 million, and revaluation reserve, there is no change, 7 million. Then retained earnings, we have 8 million. The total is 15 million. So therefore the total shareholders equity will be 28 million. Okay, so this is the shareholders equity after the right issue. So this is how you record the right issue. Thanks for watching. I'll see you soon with another video. Bye for now.